And for quality, our steadfast belief is that quality is, if not the most important, one of the most important factors from an investment perspective within the equity landscape, increasingly so as you get further and further down the cap spectrum. And so when you think about value versus growth or value versus momentum, I like in some ways to just pull quality out of that conversation because it doesn't necessarily fit as cleanly in the way that some people perceive the factor framework, meaning you're thinking about companies that either have high ROE or high ROA or high ROIC, depending on how it's been defined. Maybe you have some balance sheet metrics like net debt to EBITDA, as we do with the O-Shares products here at Alps. But importantly, all you're really trying to do is take the market portfolio that you're addressing, whether it's large caps, mid caps, international, or otherwise, and just cull it down to companies who have characteristics that an active manager might have seeked out in the past, but might have charged you significantly more fees to get access to.
Right. And we've seen you before talking about Russell 2000, 40% of the companies are not profitable. So that's in the small cap space in particular. But what I find really peculiar about quality is if you ask any individual investor who's buying stocks, kind of the framework for what they look for in companies that they buy, they really tick off a lot of the quality metrics. Whether they're actually doing that or not is a different story. Sometimes they want to, the hot item of the day. But when you ask them how they think about investing and what they want to buy, it really comes down to quality metrics, attractive balance sheets, low debt,